Hello, everyone, and welcome to today's webinar, Navigating COVID-19 for Nonprofits, from Financial Triage to Scenario Planning, presented by the Wallace Foundation. Before we begin, a few housekeeping notes. All attendees will be muted on this webinar. You will see the red microphone at the bottom and top right of your screen. To communicate with the presenters or host, enable the Q&A and chat function, the blue buttons at the bottom of your screen. You may type a question or comment to the host using the chat box, and you may type a question to the presenters using the Q&A box, both to the right of your screen. You may designate who sees your comment or question for both the chat box and the Q&A box, shown in the left two images. Please type any logistical questions or comments to the host via the chat box, and please type any presentation questions to our presenters to all panelists via the Q&A box. Feel free to send in your questions to our presenters throughout the presentation, and we will try to get to as many as we can. Lastly, this event is being recorded. The event recording and slide deck will be available on both the Wallace website and the FMA website shortly after the event. And with that, I'm going to hand things over to our moderator, Lucas Hild, to kick us off.
Well, thanks, and good afternoon, everyone. And thank you for joining today's webinar, Navigating COVID-19 for Nonprofits, Financial Triage to Scenario Planning. I'm Lucas Hill, Director of Communications at the Wallace Foundation. Our webinar will run today from noon to 1 p.m. We'll leave at least 15 minutes for your questions. And as Jenna noted a moment ago, please post the questions during the webinar. But because we have about 1,700 people registered, it's almost certain that we won't be able to answer all the questions. The webinar will be recorded and archived within 48 hours on both the websites of the Wallace Foundation at wallacefoundation.org and FMA at fmaonline.net, along with the slides. We'll send out a link to all of you who are registered. Before we begin, just a brief word of background. We all know COVID-19 is causing massive disruptions across our economy. Government, where budgets will be affected by diminished tax revenues, businesses, many of which have been shut down to help slow the virus's spread, and nonprofits, our focus today, which are facing actual or potential losses of both earned income and contributed income. Nonprofits employ about 10% of the nation's workforce. They provide an increasingly broad range of important services, access to arts and cultural experiences. In short, they're the backbone of civil society. And in the face of this pandemic, our hope for this webinar is modest, but we think important, to review some of the key areas that nonprofits should consider focusing on and to point to some tools that may be useful. Our speaker will be Hilda Polanco, founder and CEO of FMA, an 80-person consulting firm that helps nonprofits improve their financial management. And before the virus hit, there were 5 offices, and obviously everyone's working from home now. Wallace has worked with Hilda and FMA since 2009, when we launched an initiative with FMA to help after-school organizations strengthen their financial management skills. An independent evaluation by the firm MDRC and Child Trends found that the participating nonprofits benefited in strengthened financial management. So out of that experience, we built a website of free financial planning resources at strongnonprofits.org. And Jen, if you could advance the slide to show it, or if folks can see it, that's great. And Hilda is going to reference those tools. In addition to leading FMA, Hilda is an adjunct professor at Columbia University's Department of Health Policy and Management. She's on the faculty of the Geraldine R. Dodge Foundation's Board Leadership Training Series, the Annenberg Foundation's Alchemy and Board Development Training Series, and Columbia Business School's Executive Education Program. Her work in the area of nonprofit financial management has been nationally recognized. She was honored in 2016 as a Leap of Reason Ambassador. She's also earned Smart CEO Magazine's New York Brava Award for Top Female CEO, the Social Entrepreneur Award from the National Association of Women Business Owners in New York City, the Women's Housing and Economic Development Corporation Award for Outstanding Leadership in the field of nonprofit finance, and the Latina Excellence Award in Community Service from Hispanic Magazine. She's also a genuinely nice person, if you have the chance to meet her. And assisting Hilda today and shepherding questions from all of you will be Gretchen Upholt, a lead consultant for FMA and head of its Midwest office. In addition to consulting across the country, Gretchen's taught at the Wagner Graduate School of Public Service as an adjunct professor and teaching colleague. And with that, let me now turn it over to Hilda and Gretchen, and thanks again to all of you for being with us today.
Good afternoon, everyone, and welcome to our webinar. It's a real pleasure to join you, and Gretchen will be joining me as well in helping with our Q&A and moderating those questions. I am looking forward to spending time with you in the next hour, and I'm going to continue off video and will return during the Q&A on video. As we think about the financial challenges that organizations are facing today, I want to provide a framework for you of how we would like you to think about financial planning at this moment in time. For some of you, it may feel like a paralyzing moment where there's so much to think about and so much unknown. In financial planning, what we aim to do is start with what we know and then make certain assumptions and then manage towards those assumptions. What I have here for you today is a three-part process that I would urge all of you to consider in framing your financial planning. First and foremost, we want to understand where we are today. And when I say today, I mean where were we on February 28th before the world changed, and how have we continued to keep up in our financial health during the last 6 weeks or so. So today literally means today. For many organizations, today often represents where were we as of the last audit, as we tell our financial story externally often through our audited financials. What we mean in this context is today is what are our net assets as of the current time? What is our liquidity position as of the current time? In essence, what are the resources that we have available for our decision making going forward? Once we understand where we are in terms of our current position, we then want to think about the implications and scenarios that we may be facing on a revenue perspective as well as an expense perspective. And we know that for nonprofits, a lot of what we do is limited to the revenues that we bring in. So for the next hour, you'll hear a balance between thinking about our revenues and thinking about how those revenue implications affect our expense models. So that brings us to this concept of scenarios. And you've probably heard that term over and over again in the last couple of days. Scenario planning is the top tool for navigating these uncertain times. And I'll say more about that during our time together. And then lastly, once we understand what scenarios might be before us, we want to develop strategies to manage the cash flow associated with those scenarios. And cash flow comes in one of two ways. We could finance our way into cash flow, or we could generate operating cash flow. And there's a real difference between the two. I'll say more about that a little bit later, but I think one of the critical considerations for leaders and boards today is to be very clear on the distinction between are we financing our way through these difficult times, or are we earning revenue, receiving contributions in a way that will allow us to navigate this cash flow from an operating standpoint. So following this framework, I want to concentrate on that first part, the composition of net assets that we have available. For years at FMA, we've been talking about this concept of LUNA, liquid, unrestricted net assets. And on the Strong Nonprofits website, we have some tools that I'll point you to if it's a new concept to you. Liquid unrestricted net assets represents reserves that an organization has accumulated that are completely unrestricted, liquid, meaning they're cash or close to cash. And at this current moment, that is the question that I would want you to ask yourself. What is our level of unrestricted net assets that we have to weather any challenges that may be coming our way? And if we have board designated funds, is the fund designated for a rainy day? One might determine that it's raining right now. Or is the board designation for another purpose? And working closely with your board to understand their willingness to redirect those designated funds would be really critical. So that's the first part. What do we have right now at our disposal that is completely unrestricted? On the right side, we have what we call with donor restrictions, and we've read nationally many funders who have been willing to relax their expectations around deliverables, accelerate payments, revisit project grants into unrestricted grants. So as you're going through your inventory of where are you today, I encourage you to reach out to your funders and think about how you might be able to either relax those expectations or defer deliverables. The idea being conservation of the net assets that you have today for the future of the organization. For some of you who may have endowments, I understand that the spending rates may need to be revisited given the occurrences in the market. The best conclusion here that I have for you is understand how much of those restricted net assets could be released at this time. So in terms of the options beyond current net assets, we're looking at our revenue, our expenses, and financing options. And I want to get to revenue first. When we think about revenue, there are quite a few sources of emergency relief funds that organizations are able to tap in the current time. Some of those funds are in loan funds. Some are forgivable, which means they are grants. I'm going to say a little bit more about that when I come back to financing. But I understand that first and foremost, most organizations are looking for that stimulus opportunity, those emergency funds, and they come with really tight deadlines. So if you're not familiar with those, that would be a really important follow-up after today, that you become totally aware of any emergency relief funds that may be available in your community, be it through the federal government or through local relief funds that have been established. Beyond the emergency relief funds, I then urge you to think about what are your core operations that you need to, want to, and will prioritize for your organization. With all of us working from home and operating from home, many organizations' programs are being restructured. And there may be difficult conversations around which programs remain our priority at this moment in time. Core operations is a key concept I want you to walk away with today. What is core to the organization, and in the event that you cannot continue in all of your programming, which is the core that you will be raising dollars for or redirecting dollars for? And who are your core funders in that context? While I know that community is here to support organizations, those long-time partners that you've developed over the years, be it government or private philanthropy, those are the conversations that you want to start with people that believe in your work and that are really in a concerted effort to save the work that you are doing. So with that context, I'd like to go through the sources of revenue that you might be thinking about at this current time. And I have here for you practically every possible contributed or earned revenue category that an organization's budget might include. What I would recommend as you think about where are we and what are the scenarios that we have ahead of us is think about what are the components, who are the sources of your contributed revenue, What are the long-term implications of these grants? What are the what is the ability to repurpose, to really focus on that core? And I know for many of you, May is the special events time of the year, June, and those events are not happening and they will not be happening. So what does that mean in terms of repurposing some of those dollars that had already been raised? I've seen organizations do amazing work in revisiting those sponsorships, those activities that were already in line for the event and repurposing those revenues. Most sources I've seen be willing to redirect sponsorship dollars or registration fees to donations for the organization. If you have in-kind as part of your business model and those donations simply cannot come in today, what might be some replacement strategies? So I know that you know your budgets much better than I or anyone else. And my message here is really look at each line and understand the opportunities and risks associated with them. One of the tools that we recommend that you consider is something that we call the Revenue Scenario Planning Tool. It is a tool that has been on Strong Nonprofits from its original development, and it is really helpful as an organization thinks about its scenarios, starting with the revenue scenarios, and again, focusing on what are our core operations, or do we actually see that we have revenue available for areas that are not as core to what we are doing? How do we rebalance all that? But really the idea is to develop, and in this tool, we're working towards 3 scenarios, and more than 3 would be practically difficult, probably, but you may have a unique situation where you may want to look beyond 3 scenarios. And as traditionally scenarios are labeled, we would have a best case, a moderate case, and a worst case. You can build likelihood of receipts on some of these potential revenue scenarios, and depending on the definitions, they would be counted or not. The tool is on Strong Nonprofits. It has quite a bit of detailed instructions, and for those of you who may not have a tool that you've developed yet, this is a really great starting point for this conversation. And the idea is to identify uniquely different scenarios that you could see as your journey into the future. Let me say that scenario planning is not about getting it perfectly right. Scenario planning is around identifying choices in the road ahead that are distinctly different and that are going to be uniquely identifiable because you've defined what are the indicators for each of these scenarios. What will the market tell you that will allow you to know that you're in one of these scenarios? What are the trigger points for these scenarios? And what's the timing? And most importantly, once you've defined these scenarios, what will be the actions that you'll take with each? Scenario planning, as I mentioned, being the tool that we think will be most helpful to start to define those roads that you might be considering in your future. On the expense side, so we now have some drivers, particularly around the revenue, and think of this as it's a cycle. We think about revenue, we think about expense. These are not laterally different processes. When we think about expenses, we're going to be thinking of 3 categories. The largest category in an organization's operating budget, as we all know, is workforce. 70, perhaps even 80% of your expenses are going to fall in that category. So from a scenario planning perspective and from a decision-making perspective, that's where a lot of the conversation will go. I'm going to come back to what some of those choices are. On the occupancy side, here in New York City, we've seen organizations' physical location be repurposed. An after-school program now becomes providing childcare services for the community's first responders' children. we've seen it become food delivery programs. So occupancy implies the rent, the utilities, the carrying costs. And for some organizations, those are assets that are idle right now. For others, they become assets that have been repurposed. So I really want you to think about what is our physical plant, our physical location expenses, and are there any alternative repurpose type of actions that we could take to minimize those carrying costs. And then the third category of expenses is what I would say other goods and services. Those are the expenses that are probably been modified significantly, like travel, professional development, supplies, those things. So if you think about your scenarios and your expense categories, start by thinking about how is your budget divided between these three categories. And then also think about another dimension of categories of costs, which is which are your fixed costs that you will incur irrespective of activity. Like I mentioned, the rent, utilities are the perfect examples. Are there variable costs as you downsize a program or expand a program? What will be the expenses that will need to be adjusted to reflect the new reality? And then there may be some costs that we call semi-variable, which vary with activity, but not as much. Utilities might be an example. So we want to look at the categories, those three major ones, and then think of them as to whether they're fixed or variable. This slide probably represents 70% of the conversations that you'll be having or you've already been having. And that's around managing the workforce during this difficult time. Within workforce expenses, we want you to think about a few things. Of course, salaries and all associated benefits. As you're thinking about some possible actions, and I'm going to walk through quickly these 4 actions that I have here, what might be some accruals that you may need to be aware of? And I have this here as accrued paid time off by staff. Should you need to make a decision of a layoff as opposed to a furlough or some other restructuring, liabilities for accrued vacation and sick, which are often referred to as PTO, become due and payable. And in 2008, we saw, 2009, some nonprofits faced with liabilities that they weren't prepared to be able to satisfy, but yet needed to from a workforce restructuring place. So please know what those liabilities are as you embark on what your choices might be. With the Families First Act, which is part of the whole CARES Act, there is some federally mandated expanded leave for organizations under 500 employees, and I would want you to understand what the implications are for you in that context. In terms of possible actions, there's, of course, reshaping positions or consolidating positions. We've seen organizations offer part-time staff structures rather than reshaping or eliminating, and please be aware that that may impact some of the benefit eligibility. Furloughs and layoffs are the terms you may be hearing more of what's happening in the economy. This is a moment where I encourage you to contact legal advice and seek legal advice. Some funders have had law firms provide pro bono. Your board members may have advisors. You want to make sure that as you're structuring this, you're keeping 2 things in mind. The legal implications of this, but very importantly, your values as to how you approach decisions around staffing, and an equity lens. When you make these choices, think about an equity perspective, whether it's across the board, reductions in compensation at the higher levels being higher than at the lower levels. This is all part of the same organization, staff, and community that you've been supporting through the years. And you also want to think about your capacity post-crisis. What are those core programs, as I mentioned earlier, and what staffing will you need on the other side? And I know we're all hearing this context of the other side, not really knowing when the other side will really be. So it's hard to envision what we want it to look like when that other side isn't defined, but perhaps you envision it as what do we need to preserve for our core operations going forward. In terms of the cash flow associated with the financing of the organization's expenses, I'm encouraging you, think of cash flow as weekly, monthly, quarterly. We want to monitor that cash flow as much as possible and plan. Approach vendors and partners and revisit payment terms that you may have had with them in the past. Non-essential payments, it's really hard to imagine being on that list and being thought of as non-essential, but in fact, some of your expenses may be non-essential at the moment. Approach anyone who owes you dollars and think about restructuring any payments. Here is what we call the cash flow template that appears on Strong Nonprofits. And the cash flow planning tool, I have to say this and the scenario planning tool and a few others have been downloaded thousands and thousands of times since these tools were developed. The cash flow planning tool I always call the navigation device for the executive director. When you get that phone call, what does it mean? This is what we want you to take those scenarios and plot them on a cash flow basis. In terms of financing, so I mentioned there's a very big difference between financing and generating revenue from an operating standpoint. I have here a few options of financing that you may be aware of. I want to say something about the existing lines of credit. For years, I've been sharing when I teach that we want to apply for a credit line when we don't need it, and we want to manage that credit line to serve as a flotation device and not as a source of financing operating deficits. And so from a flotation device perspective, that means you know how those dollars are going to be repaid. And I want you to not forget that during this time. The existing lines of credit are there for you, but remember they need to be paid back. And often lines of credit have a 1-month full repayment requirement. So before you draw on your line of credit, read the document with the bank and talk to the bank about their willingness to restructure the 1-month pay down if you don't believe you'll be able to do it. In essence, with any financing, you want to do it responsibly and think about the options. I've also been brought into conversations recently, particularly with board members who were around and actively involved during the banking crisis when we saw situations where banks who had open lines of credit with customers really came back and said, we're unable to meet this credit line because we don't have the liquid resources to back it. And so there are some board members who are recommending draw down on the credit line to make sure that when you need it, you will have the dollars. And these are very personal organizational decisions to be made. I bring it up because you may be hearing this advice, and if you do, certainly it's one strategy. Having it in the bank, the only cost is the interest rate, but drawing it down and then utilizing the funds, those are the decisions that you really want close conversation with your board around what those choices are. So a line of credit, it's an amazing tool. It's available immediately. If you have it, now is probably not the time to go to apply for one, but doesn't mean you shouldn't if you have a strong relationship with your bank.
Hilda, if I can just jump in, and that actually, there were some questions about sort of the reality of that, of applying for a line of credit now. If you don't have one, you just kind of said now might not be the time, but can you talk a little bit more about that?
Sure. So a line of credit is something that is issued based on the strength of your financial statements. Sometimes they're collateralized with receivables, but in general, it's based on the health of the organization. And establishing health right now is going to be a bit more difficult. Typically, a line of credit application requires cash flow projections for how you would envision paying back the line. And so again, it's not impossible. Nothing is impossible, and nothing should be off the table in terms of being asked. In terms of likelihood, I think it may be more challenging, which brings me to the SBA loans. That is the area where flexibility is greater than ever before. Nonprofits even being considered for small business loans is a first, and I'm going to come back to saying a lot more about that. And so if you don't have a credit line, an SBA loan might really be the place to go. In addition, we realize across different communities, there are some philanthropic organizations that are creating bridge loans. And again, best to know CDFIs and philanthropic entities in your community that are offering this. The CARES Act, let me start by saying that every presentation we do, it feels like yesterday something was updated. So our slides are as updated as they can be, given the information as of a couple of days ago. There is more. There are these Main Street loans coming out, and we're still trying to figure out, is Main Street loan available to nonprofits? We know that these two are available to nonprofits, and the Disaster Assistance Program or the PPP program. The bullets are here. I'm going to say one thing about the PPP, and that is that the Paycheck Protection Program is a loan with an option to be forgiven. I just want that to settle in for a minute. A loan that can be forgiven. The interest rate here we have capped at 4%. It's actually 1% at this point. Could change, but that's what it is right now. And it's for organizations that have employees less than 500. And when this program was announced, we realized that for some folks, the response was, there's no way nonprofits will ever see this. This is for the small business community, those who have strong banking relationships. And the answer to that is yes and no. Nonprofits are accessing these loans. At FMA, and I have the link here on the website to what we call our PPP toolbox. We've been working with over 15,000 nonprofits who have accessed this toolkit, and it is a possibility, but time is of the essence. It is intended for organizations who, in all good faith, intend to maintain their workforce for a period of 8.5 weeks, 2.5 months. And they are going to move forward with that. It starts as a loan, and if you follow the maintaining of the workforce, it can be forgivable. We have an entire webinar just on the PPP program, so I'm not intending to recreate that here. But I just want you to know, if you meet the criteria and you plan to maintain your workforce, or you're looking for ways to make that possible, go talk to your bank immediately. Not all banks are participating, but figuring out, can you get to a lender? That's the number one. And again, FMA Toolbox, there to help you. The Disaster Assistance Program, less of a time crunch because it is longer term. The PPP was over $349 billion. As of last night, the SBA has allocated 70% of those dollars. We know many nonprofits that are in that group. And so with regard to financing, that would be something you would definitely want to explore.
Hilda, before you move on from that, there's a lot of questions coming through on a lot of specifics around the PPP. So I just want to remind all of you, we do have that toolkit available that Hilda just pointed you towards. We probably won't be able to answer very specific questions about CARES, PPP, EIDL, all those questions here on the webinar. However, if you go to that website, that toolkit website, we are holding clinics where you can talk live to a consultant, and we'll do our best to answer some of your questions. So I strongly recommend, if you do have questions about those programs, that you check out that website. We'll put it up again at the end. There was one question that came through about the PPP, though. Hilda, that I thought you would love. I loved it. And it's more about planning. It's more about budgeting and planning and sort of thinking through, with all these unknowns around PPP, how do you recommend that people incorporate that into their planning, budgets, cash flows, particularly even looking into next year for those that have a June 30th year end?
I think, so PPP, again, time is of the essence, and of course, we want to do it in a responsible way. So I would encourage you to think about what is the payroll that we've had historically, what is the payroll that we intend to carry for the next 2.5 months based on that definition of core programming and based on your plans with other revenue and ongoing activities. For some organizations, June 30th being their end of fiscal year, thinking about budgets for next year, it sort of segues well into this taking action slide. It's, we're really redefining the concept of a timeline. It is imminent, and imminent for many organizations is like this month. Short term, some organizations are defining that through June 30th. Longer term, some organizations are defining through December. And so in my taking action points here, I want to emphasize that budgeting and planning is not business as usual right now. You may have board members that have the opinion that a budget is a budget and that budget will never change. You can reforecast, but you will not revisit a budget. There is that belief that we need to approve a budget at the beginning of a fiscal year from a governance perspective, all absolutely accurate. The difference here is that the ability to project these scenarios is more limited than perhaps we've had in the past. So from a taking action perspective, we want to engage all the right members of leadership. We want to get their perspective, those that are closest to what it would mean to reconfigure your programming. What would it mean to revisit your relationships with your funders? What would it mean to restructure workforce? So you want your development director, your program leadership, your talent leadership, and of course, your finance leader who is going to be translating these scenarios into dollars. As far as communicating with your board and the scenario planning and budgeting, try your best to create a relationship with your board where there is flexibility and decisions are being made with the best data as of today, but knowing that that data may be different in a couple of weeks. So nimbleness, tools, which is why these tools are so important, really critical that that be the way that you approach the planning process. These two tools that we have here, I encourage you to visit. The first one is on our website, and it is basically just how to think about nonprofit finances. That was dated the first Friday in March, and it was very early on when we were just realizing what might be upon us. Since then, there is a blog with on the Wallace Foundation website that also summarizes some of the things that I've been covering today. So what we would like to do now is I'm going to put myself back on video, and Gretchen is going to join me as well. And we're going to go over the questions that you have submitted for us. And we're going to do that for about 10 minutes or so. And then I have lots of other resources that I want to point to that will be on the deck that you receive, and all resources have links. So more to come. Gretchen, what do you have for me?
Hi, everyone. It's great I can't see you, but you can see me. I can see Hilda. So lots of great questions coming in. A lot of the questions, as I mentioned before, are very specific to the PPP, the EIDL, the CARES Act, all of those. And we probably don't have answers off the top of our head for a lot of those questions right now, just so you all know. But we'll put that toolkit back up in a moment, and I've been sending it to some of you as well, and that is a great place to get all of those PPP questions answered. So just so you know, we probably won't answer a lot of those right now. I did want to ask you, Hilda, so you mentioned Luna all the way at the beginning of the webinar. Can you just talk a little bit more about operating reserves in this environment, so partially, you know, if we have them, how should we be thinking about using them, right? We don't want to stop them immediately, but then also, should we be trying to grow them right now? Is that reasonable as we think about the future? How do operating reserves kind of fit into the current environment?
Thank you, Gretchen. And so Luna is the concept of your reserve balance, your liquid reserve balance, but then we are advocates for calculating what we call months of Luna. And months of Luna really means your months of operations that are going to be covered by your reserves. And we've always said that operations is defined by the leadership. And so is it my core operating expenses for a core payroll group of staff? Is it my rent, utilities? I've often said it's what would it take for the executive director to sleep at night? And different executive directors have different risk tolerance. So this is all for you to define today. What are the level of operations that you want your reserves to cover? And I've spoken to many CFOs who have said, you know, we worked on accumulating our reserves and I'm good through June 30th. And that runway of how long can I say I'm good until the next revenue dollar comes in? That's what we want you to think about. It may be tough to accumulate reserves right now from a day-to-day perspective, but I also encourage you to talk to your funders. We've seen many funders be willing to make one-time reserve grants for those organizations that they're really committed to. And so don't fear asking that question. The answer is not possible. That's all that it is. But in terms of conserving that cash for weathering the storm until some of these unknowns become more known, that would be the goal for reserves at this time.
Great. Thank you so much. Switching gears just a little bit, you touched on this idea of scenario planning and thinking through, and you put up that revenue tool, and I think a lot of people were really excited about that. So that revenue tool is available on Strong Nonprofits. Can you talk a little bit about the time frame out that organizations should be looking? I feel like we're facing so many unknowns right now. We don't know how long this will happen. I know I was on a call for a board that I'm on this morning, and we were talking about we have no idea what's going to happen in the fall, right, and what our programs might look like. So can you talk about what time frame we are recommending organizations are looking in terms of the cash flow planning, in terms of scenario planning? Like, what should we be focusing on right now?
So if there's an organization that June 30th is their fiscal year end, there's just this natural, almost artificial break, and we have to continue to operate as an organization managing our finances against our fiscal year. So we definitely need to see through the fiscal year if it's June 30th. I find many organizations are thinking in increments of 30 days, 90 days, 120 days, and you define that basically based on the variables. If you're a school-based program, you probably are concluding that there will be no back in school through June 30th. What does the summer mean? Think of your business model. So what happens in your organization over the summer? And you might have different scenarios of what might happen. We work with many organizations that support school districts. One scenario is school is up and running in September. Another scenario is school is not up and running, and what would that look like? And so I think the time frame depends on your business model. It depends on your fiscal year. And it also hopefully is a test to an organization's willingness to not feel like they are bound by some artificial definition of time and more willing to recognize that we are going to learn information in segments. And we're going to go one segment at a time. You may be waiting for a major contract to know what that is going to, what the results will be there. Back to you, Gretchen.
Thanks. Yeah, thanks. Sorry, unmuting. So there are some questions you touched on, again, at the very beginning when you talked about Luna, our net assets with restriction and our net assets without restriction. And you mentioned that some funders are allowing organizations maybe to remove the restrictions, make grants general operating support. I think partially I'm curious how much you're seeing that, or if you're recommending that organizations do that. But also, what about organizations that may have a fairly significant temporarily restricted net asset balance, maybe something that's held for a program that they're not able to do anymore? Is it okay to be using that cash, right? The cash is in the bank and they need to pay their bills. Is it okay to be using that cash if it's meant for a program that they're not going to be able to do? How might organizations be able to sort of manage having access to cash that they don't have access to or they should be using?
That's a great question. From a perspective of financial health, we know that often months of cash is the indicator, and that's why at times we've said, no, it's actually months of Luna you want to look at because you may have cash in the bank that is restricted. And so it's never okay to use restricted cash for a different purpose. And this is no different. I think what is different now is the level of sort of suddenness to this situation that does very appropriately open up a conversation with your funder about that grant. So if you're going through your temporarily restricted net assets or net assets with restrictions, and there's 5 grants, a conversation with each funder, I urge you, if it hasn't happened yet, it needs to happen very soon. And it's a combination of the development director and the program leader talking to the funder around what were the expectations. And again, if you read what Peak Philanthropy has put out, lots of different sources really encouraging this loosening of those restrictions. So don't be afraid to ask. I think you'll be pleasantly surprised. Those funders want you to be able to continue delivering that program and now are willing to, that aspect that is in their control. If they can't write an additional check, they can certainly address this. And like any other restructuring of a grant, you want to have a conversation and have something in writing from the funder after that. But that should be the top priority as you're applying for PPP or SBA or drawing your credit line. And yes, that cash is in the bank and it just covered payroll on Friday. This cash management becomes really critical, but nothing surpasses really talking to your funder.
Excellent, thank you. So I know you want to get some resources, so I think I'm going to give you maybe 1 or 2 more questions, and then we'll go through the resources that we have available. This one's switching gears a little bit, but I'm curious, everyone's in this new normal of needing to work from home, used to probably a finance office where people are sitting at a computer and printing checks and different pieces like that. I'm wondering if you have any advice for organizations around how to maintain internal controls and other aspects of the finance office, all these big picture things that we're talking about today, but we still have to have our day-to-day operations, right? We still have to make sure that our finance office is functioning. Do you have any advice on that?
Great point. So we do realize that many finance offices are not finance offices anymore. The CFO is working from home, the accountant's working from home. And so automating the transaction processing is key, and we've been advocating for automating your bill paying, automating expense reporting. Granted, maybe you don't have much travel going on right now with your staff, but anything that requires authorizing the payments where people are not down the hall any longer, the approval process, we don't want someone signing for someone else. So there are products like Bill.com and several others that automate the bill paying so that everything is scanned upon receipt, approved, payments are made, and no one ever touches a document. That's what we're encouraging organizations to do. Assess your operations and ask yourself the question, how can I eliminate the paper, which I just read today, the IRS is no longer processing paper tax returns. So if we haven't filed electronically, now is going to be the time where more taxpayers will file electronically. That's the same for you in terms of making payments and also receiving payments. We've seen lots of organizations turn to giving instructions to deposit payments from funders or from entities that pay them rather than waiting for the check in the mail. Lots of resources on our website and others around how to automate your function so that paper is no longer required.
Thank you. And I think I'll give you one more question, but it's kind of a big one.
Okay.
People are thinking about all of the, the unknowns in the future, and, a lot of people are thinking about organizational sustainability. And I'm wondering if you have any thoughts on the value add of mergers or other kind of strategic restructuring, how organizations should be thinking about those elements as they think about their own organizational sustainability and moving forward.
Thanks, Gretchen. You saved the best for last, didn't you? The question of reshaping who you are, when I talked about core programming, I think the question of how will we retain our core programming into the future, and how do we do it in the most cost-effective way and the most impactful way. And again, I'm sorry that I'm going back to 2008 and thinking about this, Gretchen, with the question you're asking. We saw organizations who came to the realization that maybe a collaborative effort with someone else or an alliance or a merger was the answer, or it was an option, but they weren't really ready to have those conversations. But by the time they were no longer presenting themselves as an asset. They were now becoming more of a liability to anyone that would do business with them, because their sustainability had been weakened, their balance sheets were weaker. And so let's come at this from a moment of strength and think about what is your sustainability in your current organizational structure. What might it look like if it looked different? Anything from sharing back office infrastructure to becoming part of a bigger organization. We see organizations thinking maybe I should just go under a fiscal sponsorship at this point and weather the storm that way so that I'm not retaining these systems that I have right now. And so all of those are really important questions, sooner rather than later. And asking a question doesn't make it happen. And I think that's the important part. We've seen some organizations develop strategic committees within their board to explore. Explore is a planning tool. And I would recommend that for sure. Thanks, Gretchen. Okay, so just to share some of the resources that we did plan for you, there are a few slides here with different resources. This one we described as the current environment, and these are all different tools. The PPP toolkit that I mentioned and that Gretchen also mentioned, you can see other items there with all the links for you to identify. These two resources are also identified as the current environment, but they're very specific around furlough versus layoff. This one particular Harvard Business Review article we have found to be super helpful for leaders. And really the takeaway there is that coronavirus doesn't have to lead to layoffs. Are there other creative ways? And I encourage you to take a look at those. In addition, there are these resources, which are less of a COVID-19 moment in time, but very strategic pieces around what are reserves and how can funders support them. That question that I mentioned about approaching your funder. What is cash flow and how to think about it, nonprofit capital, and then Luna, which, as I've mentioned, is that's our classic piece, and encourage you to think about and share that if you may have board members who have not heard of the concept of Luna. Strong nonprofits, couldn't be prouder of this piece that has been around now for several years, thanks to the Wallace Foundation. It is over 60 to 70 tools. This is what we call the roadmap to strong nonprofits. It will be accompanying the recording of today's webinar. These are the most often downloaded tools. The tool, it has the live links. You can go to the website and find everything. We find sometimes just having this cheat sheet is helpful. The revenue scenario planning tool that I mentioned, I'm just highlighting it here again as a tool that we really would love for you to explore and take a look at. The cash flow tool is a really important tool as well. And I want to also point you to, we have virtual walkthroughs of the site. These are 2 dates where the walkthroughs have been scheduled. And what our team has done and for both of these is they plan to showcase the scenario planning tool as well as the cash flow management tool. This hour-long webinar is walking through all of the possible tools, orienting you to the site, but specifically those two that we think are really critical at this moment in time. If you're like some of us who find it hard to be at a certain place at a certain time, there's a 15-minute on-demand walkthrough of the site and how it might be able to help you at this time. I encourage you to consider these times and visit the website and see how that could be helpful. Just in closing, I want to turn back the podium, so to speak, to Lucas, who is going to some closing thoughts.
Well, thank you, Hilda, and thank you, Gretchen, for a terrific presentation. And thank you as well to all the 1,000 of you who have been on this webinar. I will say that I was struck by the quality of the questions, which seemed to me to get at questions of judgment in a very, very difficult time. And I think, Hilda, what you have provided here is not so much direction about what to do, but rather some scaffolding to help make those decisions, those difficult decisions, as informed as possible. I think you've offered us a kind of troika of 3 building blocks, as you said: revenue, expenses, and financing. You've broken down the underlying elements of each of those, and you suggested that decisions be made with an eye toward values, with an eye toward equity, with an eye toward capacity, and acknowledging that the uncertainty level is very high. I want to note again that the webinar will be being recorded and will be archived on both strongnonprofits.org and fmaonline.net. It's going to be archived on the website of wallacefoundation.org, which is the parent website of strongnonprofits.org, and fmaonline.net. The slides will also be posted with those helpful resources. So in closing, again, thanks to all of you who have joined with us on this webinar. Thanks to Hilda and Gretchen. Thanks to our partners at the Hatcher Group for assistance in technical management. We will continue to post resources on the Wallace Foundation blog as we gather them, and we'll look forward to potentially further conversations with Hilda as this crisis develops. Thank you, everyone, for joining us today. Goodbye.